SF Desk Brief. Wednesday, January 28, 2026. Stay until the end for today's scenarios and probability-weighted outcomes for today's silver price moves. Good morning. This is the Silver Forecast Desk Brief. What we're seeing today is not a normal bullish silver market. It is something more fragile and more dangerous. Silver has entered an unstable phase. What just changed? Overnight, physical silver in Shanghai cleared $131.26 an ounce. At the same time, comex silver is still sitting near $114. That gap is not a premium in the traditional sense. It is a disconnect. In a healthy market, price differences close as arbitrage restores balance. Here, that is not happening. Instead, the spread is widening while price accelerates. That tells us price discovery is slipping away from the paper market and being pulled by physical demand elsewhere. This is not a breakout. It is a loss of control. Why the dollar matters here. Now layer in the currency side. Yesterday, the US dollar weakened again. The DXY fell to 95.5. In a stable market, dollar weakness typically allows silver to drift higher. In an unstable market, dollar weakness produces violent movement. And that's exactly what happened. Silver didn't hesitate. It didn't consolidate. It accelerated. That reaction matters more than the price itself. This is not strength. It is pressure escaping a system that can no longer absorb it smoothly. This is not speculation. This move is not being driven by retail enthusiasm or speculative momentum. Industrial silver is clearing at higher prices right now, while the currency underneath it weakens. That combination is structural. And silver is not alone. Gold is confirming. Platinum is confirming. Copper is holding firm. This is real asset repricing under currency stress, not a silver-specific headline. What the mainstream is missing. What you are hearing in the mainstream today is not necessarily false, but it is incomplete. Silver supply is tight. There are very few large primary silver mines globally. New supply takes close to a decade to bring online. Mining stocks have been suppressed for years. Now earnings are about to be reported, not with $30 or $40 silver assumptions, but with silver trading above $110. That shift in math has not yet made it into models, coverage, or positioning. And markets are rarely calm when that adjustment begins. The reality check. Strong structure does not prevent volatility. It explains why volatility becomes violent. In unstable markets, price does not trend cleanly. It moves in bursts, gaps, and sharp reversals. A short-term pullback is always possible. Anything can happen when a system is under stress. But here is the key distinction. As long as Shanghai continues to clear at these elevated levels, any pullback in paper silver is not resolution. It is positioning stress. Resolution only occurs when physical and paper prices realign, not when paper price temporarily retreats. Today's scenarios and probabilities. This is where we close. Scenario 1. Volatility pullback/positioning stress, 35%. Silver experiences a sharp but temporary pullback driven by profit-taking, leverage reduction, paper market pressure. Physical prices remain elevated. Shanghai premiums persist. Structure remains intact. This would be a stress release, not a failure. Scenario 2. Continued acceleration/disorderly extension, 55-60%. Silver continues higher as physical clearing remains elevated. Dollar pressure persists. Paper markets fail to regain control. This path is less orderly, more volatile, and increasingly likely while physical demand leads. Scenario 3. True resolution, low probability, less than 10%. This would require Shanghai premiums collapsing, physical demand easing, dollar pressure meaningfully reversing. There is no evidence of this today. Bottom line. This is no longer about whether silver is bullish. It is about whether the pricing system can stabilize. So far, it hasn't. We'll be back tomorrow morning with the next signal.